In the previous module, we watched Acme Manufacturing transform from paper-based chaos to a connected digital operation. But we stopped short of asking the most important question. What technology made that transformation possible? What is the single category of software that connects finance, procurement, inventory, sales, and human resources into one unified system? The answer is Enterprise Resource Planning, or ERP. It is the backbone of almost every large organization on the planet. And as SAP consultants, it is the technology we implement, configure, and extend every single day. Welcome to the ERP module. By the end of this 10-minute session, you will be able to do 3 things. First, define ERP and explain in plain language what problem it solves for a business. Second, describe the evolution of ERP, where it came from, how it grew, and where it is heading today. Third, explain the core modules that make up an ERP system and how they connect to create a single source of truth across the enterprise. Let us start with the definition. Enterprise Resource Planning is a category of software that integrates all of a company's core business processes: finance, procurement, manufacturing, sales, human resources, into a single unified system running on a shared database. That last phrase, shared database, is the key. Before ERP, each department ran its own system. Finance had one. Procurement had another. The warehouse had a third. None of them spoke to each other. The result was what we saw at Acme: duplicate data, manual reconciliation, and decisions made on yesterday's numbers. ERP eliminates that problem by design. Every transaction, whether a purchase order, a production run, or a customer invoice, flows through one system and updates one shared set of records. The purchasing manager and the finance director are looking at the same data in real time. ERP did not appear overnight. It evolved over 5 decades, and understanding that evolution helps explain why modern ERP systems are the way they are. In the 1960s, the first wave of business software emerged: simple inventory management systems running on mainframes. Companies could track stock levels electronically for the first time. In the 1970s, MRP, Material Requirements Planning, connected inventory data to production planning, calculating what raw materials were needed to meet a schedule. In the 1980s, MRP2, Manufacturing Resource Planning, added financial data so the system could not just plan production but cost it. In the 1990s, the term ERP was coined by Gartner in 1990 as systems expanded beyond manufacturing into HR, sales, and service. SAP was ahead of this curve, R2 in the 1970s and R3, the client-server ERP that defined the modern era, in 1992. And from 2000 to today, ERP moved to the cloud, embraced real-time analytics and AI, and evolved from a system of record into a system of intelligence, exactly where SAP S/4HANA sits today. Let us look at what an ERP system actually contains. Every major ERP platform, and SAP in particular, is built around a set of core functional modules, each covering a specific business domain. Financial accounting, FI, and controlling, CO, handle the general ledger, payables and receivables, and internal cost accounting. Materials management, MM, covers procurement, inventory, and goods movement. Sales and distribution, SD, manages the order-to-cash chain. Production planning, PP, connects demand to manufacturing, and human capital management, HCM, covers the employee lifecycle. Plant maintenance, PM, keeps equipment and assets running. The critical point: these modules do not operate in isolation. When a sales order is created in SD, it checks stock in MM. When goods ship, MM updates inventory and SD creates the invoice. When the invoice is paid, FI records the cash, and throughout, CO tracks cost and margin. One system, one data set, every department connected. That is ERP. Financial accounting, known as FI in SAP, manages the general ledger, accounts payable, accounts receivable, asset accounting, and financial reporting. It is the financial backbone of the system. Every transaction that has a monetary value ultimately posts to FI. The general ledger gives statutory accounts and the trial balance. AP handles supplier invoices and payment runs, AR drives customer billing and collections, and asset accounting maintains depreciation and the fixed asset register. Controlling CO works alongside FI to manage internal cost accounting. Where FI answers what happened financially, CO answers why and where, through cost centers for overhead allocation, profit centers for profitability by business unit, internal orders for project cost tracking, product costing and profitability analysis, COPA, for margin by customer or product. These two modules together span the complete procure-to-pay and order-to-cash cycles. Materials management covers procurement and inventory, purchase requisitions, purchase orders, goods receipts, invoice verification, and stock management all live here. When Acme's purchasing manager raises a purchase order, she is working in Sales and distribution SD manages the order-to-cash process, from customer inquiry and quotation to sales order, delivery and goods issue and billing. SD handles the entire customer-facing transaction chain. The key integration point: a goods receipt in automatically creates an accounting document in FI, updates stock value, and triggers the three-way match, all without manual intervention. This is exactly the cross-module flow that makes ERP more than the sum of its parts. Why do organizations invest in ERP? Because the business case is compelling, and the cost of not having one is even more so. The first benefit is a single source of truth. When every department works from the same data, arguments about which spreadsheet is correct disappear, and decisions improve because they rest on real, current information. The second is process standardization. ERP systems embed best practice processes. Implementing SAP means adopting decades of accumulated knowledge about how procurement, finance, and manufacturing should work. The third is compliance and auditability. Every transaction is logged, time-stamped, and traceable. An auditor can follow a single invoice from purchase requisition through to bank payment. And the fourth, increasingly important, is scalability. A business on spreadsheets hits a ceiling. An ERP system grows with the organization. New plants, countries, and legal entities, all within the same system and the same processes. ERP delivers real value, but implementations are complex, and recognizing the risks is part of your role as a consultant. Walk through each pitfall on the slide. High cost and long timelines. Large implementations can run into millions and take 12 to 36 months, with scope creep the #1 cause of overruns. Change management. People resist new ways of working, and without strong change management, even a technically perfect system fails in practice. Data migration. Moving years of legacy data requires cleansing, mapping, and validation, often the hardest part of any project. Over-customization. Heavily customized systems become difficult to upgrade, so best practice is to adopt standard processes wherever possible. Integration with legacy systems. Existing applications must connect to the new ERP, and those interfaces add cost and ongoing maintenance. And underestimating testing. Insufficient testing leads to go-live issues, so every business process must be validated end-to-end before cutover. These are the challenges clients hire Slight to navigate. Where does SAP sit in the wider ERP market? This slide shows revenue-based market share for 2024. Apps Run the World, April 2025. SAP and Oracle are co-leaders at roughly 6.6% each. SAP's flagship is S/4HANA. It has the largest installed base in large enterprise, and it is the focus of Slight Consulting's practice. Oracle is strong in manufacturing and financial services, led by Oracle Fusion Cloud ERP. Microsoft, at around 4%, targets SMEs and the mid-market with Dynamics 365 Business Central and Finance and Operations. Infor, at about 2.2%, is known for industry-specific depth in manufacturing, healthcare, and hospitality. The remaining 80% is a long-tail Workday, Odoo, Sage IFS, Epicur, NetSuite, and regional champions such as Yanyu, Datev, and TOTVS. The takeaway: the market is fragmented, but SAP's strength in large enterprise is precisely why it anchors our work. Let us bring this back to your day-to-day work. Everything in this module maps directly to consulting at Slight. The majority of our clients run SAP or another ERP, so understanding how ERP works is foundational to every engagement. Whatever your role, a functional consultant in FI, a developer in ABAP, or a basis engineer, you are working within an ERP ecosystem, and knowing how the modules connect makes you a better specialist. Most project issues arise at the boundaries between modules, where FI meets MM or SD meets PP. So understanding the end-to-end flows like procure-to-pay and order-to-cash helps you diagnose and solve real problems. And this sets up what comes next. Topic 03 takes you inside SAP specifically, its technical architecture, the three-tier model, NetWeaver, and how SAP implements the ERP concepts we have covered here. Let us bring this module together with 3 takeaways. 1. ERP is integration, not just software. The core value is that all business functions share one database, removing departmental silos and providing a single version of the truth. That is what distinguishes ERP from a collection of individual applications. 2. The modules mirror real business processes. FI, CO, MM, SD, HCM, and PP each map directly to a business function, and understanding what each does and how they connect is the foundation of every SAP consulting engagement. 3. Complexity is expected, and that is why SLIDE exists. ERP implementations are costly, long, and risky. Clients engage us because they need experienced partners to navigate that complexity. Your expertise in these systems is the value you bring. Before moving on, head back to the LMS and complete the 10-question quiz for this module. You will need a passing score before the next module unlocks. Thank you for watching.